Welcome to Commerce Logic. Today we are going to discuss forms of business organization. Now we'll see what is business organization. So now we should know what is business. Business is an activity which is carried out by an organization with the motive of profit. So we know that business is an economic activity which is carried on by the organization with the motive of profit. Now, organization. What is organization? It is a group of people who work for a common goal. Now, if you combine this business and organization, it is said to be as a group of people working together to earn profits. Now, we'll see about features of business organization. So in that, first one is separate entity concept. According to this feature, it has a separate identity. So according to this feature, it has a distinct name and separate existence. That means its accounts are separate from those of a person who owns it. So what do you understand by this? This says business is separate from owner. Next, independent ownership. The owners of the business may be private individuals or government. So, whoever might be the owners, every business undertaking is thus an independent unit of ownership. Next, the next feature of business organization is independent management. The form of management of an undertaking depends upon nature and legal requirements. Next, the management of each undertaking makes independent decisions and concerning different aspects of business. What the management should do? The management should take independent decisions by thinking various aspects of business. Next, element of risk. So, element of risk is involved in every kind of business. So, every business involving risk. Profit is the reward of bearing risk. If you bear the risk now, in future you will get profit as your reward. So, the risk of undertaking is borne by its owners. So, who will bear this risk? Owners will bear this risk. Though some of the risk may be covered through insurance. So, some of the risk may be covered by taking insurance policies. Next, we are going to discuss about forms of business organization. In that, private sector and public sector. In private sector, private people and group of individuals act as owners. Next, in public sector, these are owned and controlled by the government. These are two different types of business organizations. Now, we are going to discuss about private sector. Now let's see what are the forms under this private sector. First one is sole proprietor. Second one is partnership firm. Third one is joint Hindu family firm. Next, joint stock company and cooperative societies. Then we'll see detailed explanation further. So now we'll discuss about sole proprietor. So who is sole proprietor? Sole is nothing but a single person. So this business is controlled by a single individual. A single individual is called sole proprietor. It is a kind of self-employment. He enjoys profit and bears the losses as he is only the person. It is the oldest form of commercial organization. We know it is an individual proprietorship and there is no registration act for this. So this is all about sole proprietor in simple words and it is easy to remember. Next, these are the features or factors of sole proprietorship. It is one of the oldest form of commercial organization. It is also called as individual proprietorship. There is no registration act for this. And now we are going to see partnership firm. So, sole proprietorship says that only single person acts as an owner. He is the only person to enjoy the profits and bear the losses. So now in partnership firm, how many persons are required to start a business? There are two persons to required to form a partnership firm and run the business. It is called as a partnership firm. Here, how many members are required to start a business? Two or more persons. Where should they join? They join together to form a partnership and run the business to be said as partnership firm. Next, partnership deed. If you want to do and run partnership firm, it is must to have the knowledge about partnership deed. Now we'll see what is partnership deed. It is also known as partnership agreement. Next, it is a document which outlines the duties and responsibilities of all the partners in the business operations. And next, we are going to see the features of partnership. What is the features of a partnership? First one is existence of business. Whether the business is going to exist for what duration, how much duration. Second one is number of persons. How many number of persons are required to commence a partnership firm? The next, contractual relationship. It says about relationship among the partners in a partnership firm. Next, sharing profits. In what ratio the partners should share profits? Next, agency. In what way partnership firm is called as an agency and how each partner is called as an agent of a firm? Next, utmost good faith. There are two or more persons to commence a business and how they should act upon each other. That is with utmost good faith. Next, unlimited liability. In a partnership, partners are vested with unlimited liability. Next, restriction of ownership. There is some restriction of ownership that we'll see in the explanation. Next, capital contribution. The owners will contribute capital to the partnership firm. And duration of the partnership. This depends upon the thinkings of the partners and convenience of the partners. Next, we'll see about features of partnership in detail. First one, existence of business. The objective of the partnership must do some type of business, that is the activity which is leading to profits. Next, the number of persons. How many number of persons required to commence a partnership firm? Two or more. That is clear with this. Next, contractual relationship. The relation between the partners exists as per the terms and conditions of the partnership deed. According to this deed, the relation exists between the partners. Next, profit sharing. So partners share profits according to the agreed ratio. That means the agreed ratio will be in the partnership deed. Next, utmost good faith. Partners should have honest and they should behave with just. They should present true accounts and must disclose the true information to one another. Only then the partnership operates successfully. Next, unlimited liability. What is this unlimited liability? The private property is to be included in paying the liabilities of the firm. If the property of the business is not sufficient to the liabilities to repay the liabilities at the time of winding up of the business. Unlimited liability includes private property for paying liabilities of the firm. In simple words, you remember like this. Next, restriction on transfer of ownership. That means a partner will not or cannot transfer his share of business to an outsider without the consent of all the partners. Next, capital contribution. The capital contribution need not be equal by all the partners. A person may be admitted as a partner without capital formation. Next, duration of the partnership. It continues at the pleasure of all the partners. Legally, partnership comes to an end if any partner dies or becomes insolvent or retires. This is duration of partnership. So this is all about sole proprietorship and partnership. So, and other forms of business organization we'll discuss in next video. So thank you for watching. Thank you so much and subscribe my channel.